Breaking news. The most anticipated IPO of the year is here. Well, no marks for guessing. It's Zomato. But before we begin, I'm really hungry. Let me order some food. Alright, let me check out the restaurant and order my favorite dal makhani and jeera rice. Wow, the order is here. Let me finish it up and then we'll start the analysis of Zomato IPO. Hello friends, my name is Sahil and this is my Personal Finance Academy where I explain everything about money management in layman's language. Recently, Zomato has filed for the IPO and it is probably the most anticipated IPO in India. With this IPO, Zomato is planning to raise $1.1 billion. That is rupees 8,250 crore. But why is there such a hype for Zomato? And is it really worth applying for Zomato IPO? Well, the IPO dates are not yet finalized. But I decided to create a video where we will discuss the business model of Zomato and understand how it really earns money. We will also look at the industry Zomato operates in and the future growth prospect of the company along with competitive advantage, its competitors and key risk. This would be the first part of the video. Once the IPO dates are finalized, I'll create another video where we will discuss the reason why Zomato is coming up with the IPO and what Zomato is going to do with the money. We will also look at the IPO price and valuation of Zomato because no matter how good a company is, it is very important to invest at right valuation. Then we will look at the IPO price band, application window period, etc. Finally, I will show you how you can invest in Zomato IPO with a few clicks. Alright, let's get started with the first part. Zomato is a leading food service platform in India. It is involved in two business segments, B2B, that is business to business, and B2C, that is business to consumer. If you look at the B2C segment, Zomato has two major offerings. First is food delivery, where customer can order food online using Zomato platform. And second is dining out, that provides a platform to customer to search the restaurant in the city, read and write reviews about the experience, explore the photos as well as menu card, book a table and make payment while dining out at the restaurant. It also has B2B business segment that include Hyperpure, that supplies high quality ingredients and kitchen product to the restaurant partners. Then it also has a segment of Zomato Pro, which is a loyalty program for food delivery and dining out. While I am sure some of you would be aware of the revenue model of Zomato, let us briefly touch upon various business segments of Zomato and its revenue model. First business segment is food delivery. Over the past few years, Zomato has gained significant market share in the food delivery business. And it is a leader in this category with its gross order value increasing 8.4 times from rupees 1,344 crore in FY18 to rupees 11,220 crore in FY20. Friends, please note that here we are talking about gross order value. That is the total value of food ordered on the platform. In FY20, on an average, 1.07 crore customers have ordered food every month on Zomato platform. Zomato has the largest food delivery network in India. As of December 2020, Zomato had 1.61 lakh active delivery partners that delivered food at a median time of less than 30 minutes in FY20. If we look at the restaurant partners, Zomato had 1.31 lakh active restaurant partners on an average every month in FY20. So basically, Zomato earns a commission on every food that is ordered via its platform. And it is the biggest source of revenue for the company. In addition to this, it also earns from advertisement of restaurant partners on its platform. So restaurant partners pay Zomato to get visibility on the platform. Next is dining out. As of December 31, 2020, Zomato had its presence in 526 cities in India with 350,000 plus active restaurant listing. So Zomato is the largest restaurant listing and review platform in India. The major source of revenue for Zomato in dining out category is via advertisement, where the restaurant partners pays them for higher visibility on the platform. In FY20, 8,064 restaurant partners paid for the advertisement on Zomato platform. Currently, Zomato does not monetize table reservation or dining out platform. But in the future, this can also generate additional income for the company. Third business segment is Hyperpure. Hyperpure is the farm-to-fork supplying offering for restaurants in India. Zomato sources fresh, hygienic, quality ingredients and supply directly from farms, mills, producers and processors to supply to its restaurant partners. This helps the restaurant partner in making the supply chain more effective and predictable, and also improve the overall quality of the food. Restaurant partners ordering supplies through Hyperpure gets a Hyperpure Insight tag on its Zomato page, and that basically provides customers with an assurance of the quality of ingredient used at the restaurant. Zomato started Hyperpure in 2019 and it's growing rapidly. In December 2020, they supplied to over 6,000 restaurant partners across 6 cities in India. Basically, Zomato Pro is an exclusive paid membership program that provides flat discount to the customers at selected restaurants that have partnered with Zomato for Pro membership. For example, as you can see on the screen, you can become a Pro member on Zomato for just ₹200 for 3 months. In that, you would get up to 40% off on each dining experience, up to 30% extra off on food delivery. You get access to 25,000 plus Pro restaurant and also jump the queue for faster food delivery. Now that generates a consistent source of income for the company. It's like you join Amazon Prime for faster delivery. As of December 20, Zomato has 1.4 million active Pro customers and 25,350 Pro restaurant partners. If you look at the competitive advantage of Zomato, first strength is comprehensive food service platform. One of the advantages of Zomato is its end-to-end food service approach. For example, in the US, you have Yelp that is mainly used for reviews about various business. Then you have DoorDash, which is a food delivery company. Then you have OpenTable, which is a table reservation platform in restaurant. Now Zomato provides all these features of reviews, home delivery and table reservation on a single platform. That makes Zomato a highly potential business. Next strength of Zomato is its strong restaurant network. As of December 2020, Zomato has a strong network of 3.5 lakh plus active restaurants in 526 cities in India, where the customers can access the photos, menu card, explore the contact details, reviews, address, and various details like opening timing, average cost per meal, indoor or outdoor seating, availability, etc. That's a lot of data. In fact, majority of data include the reviews and photos are from the customers. So even the customers are contributing in content. Since there's already a lot of content on the platform, it attracts more and more people. That again increases the content. This again increases the customer visit. That increases the restaurant listing on the platform. It's almost like a never-ending loop. Next strength is efficient delivery network. Friends, Zomato operates one of the India's largest hyperlocal delivery network with 161,637 active delivery partners in the month of December 2020. In FY20, their delivery partners fulfilled 94.9% of the orders delivered. The median delivery time of orders fulfilled was less than 30 minutes in fiscal 20. Friends, food delivery is highly complex. As food is a highly perishable commodity that requires careful handling while maintaining high level of hygiene and real-time on-demand service. Zomato uses technology like demand forecasting, fleet optimization, and intelligent dispatch technology to optimize the matching of order and delivery partner using machine learning. This gives Zomato a strong edge over the competitors. Next strength of Zomato is its technology-based platform. Friends, Zomato is a technology-based company that leverage artificial intelligence, machine learning, and deep data science to continuously drive innovations on their platform. Zomato enables restaurant partners with fully automated order management systems. These systems offer dashboards that have features such as order transmission, order processing, menu synchronization, payment reconciliation, content promotion, marketing tool, and invoice management features. Zomato delivery partners are able to accept orders, see their per order earning, and estimate the time and navigation to restaurant location and point of delivery using the mobile app. To understand the growth opportunity for Zomato, it is important to understand the internet market in India. As Zomato is essentially a technology-based platform where people access the platform over the app or website that requires internet. Over the past few years, internet market in India has almost exploded. During 2015 to 2019, internet and smartphone market has doubled in India. With the launch of Jio in 2016, data prices have become very affordable at less than $1 per GB. And internet penetration has zoomed from 31 to 33 crore internet user in 2015 to 57 to 60 crore internet user by 2019. At the same time, there is a significant growth in adoption of smartphones and high-speed 4G connection. However, in comparison with China, we are still far behind in digital adoption. For example, in 2015, the smartphone penetration in India was 24% and it increased to 43% by 2019, whereas China has 63% internet penetration by 2019. It is expected that internet penetration in India would increase to 68% by 2025 and smartphone penetration would increase from 33 to 58% by 2025. If we compare the food service market in India versus US versus China for FY19, food service market is basically defined as non-home cooked food or restaurant food. So it contributed only 10% to the total food market in India. In US it is 54% and in China it is 58%. The online food delivery users in India are just 9% compared to 36% in US and 50% in China. Just imagine the kind of scope we have in food service industry in India. If you look at the competition, Zomato has strong competition from Swiggy in food delivery business. Then it also has competition from Rebel Food that operates the largest cloud kitchen chain in India. Of late, cloud kitchens are gaining popularity in India where you own just a kitchen and deliver the food online. It saves the high cost of opening a dine-in restaurant in a posh area of the city. Then Zomato has competition from QSR chains like Domino's Pizza, McD, etc. that have both dine-in and home delivery option. Earlier in 2020, Uber Eats exited from India and Zomato acquired the business of Uber Eats for Rs 2,500 crore. Hence, overall, Zomato is the leader in the food service industry in India. But there is one more competitor. It has recently started its operation in India. Can you guess the name? It's Amazon. Yes, Amazon has also started food delivery in India. And Amazon is the largest company in the world. If it gets into a business, it kills the competition and becomes the leader. Amazon started the food delivery in Bangalore as a pilot in May 2020 and within a year, it has already expanded to 62 pin codes in Bangalore with over 2,500 restaurants and cloud kitchens. It clearly means that in the future there is going to be a war in food delivery business similar to what we have seen between Amazon and Flipkart in the e-com business. Let us first look at the short-term impact due to COVID. COVID had a significant impact on Zomato delivery business during the Q1 of FY21. Their gross order value dropped significantly. However, it recovered quickly in the Q2 and then in Q3. However, there is again a strict lockdown in Q4 of FY21 and it looks like this would continue for the same till Q1 or probably Q2 of FY22. On the other side, its dining out business is still recovering from the pandemic as customers are reluctant to dine out. While COVID has certainly made a big negative impact in the short term, it has also accelerated the use of digital platforms and more people have started using its online food delivery platform. If you look at the long-term growth strategy, the major growth focus for Zomato is to acquire new customers as well as retain them for repeat purchase. And that requires significant investment in marketing and promotion. Over the years, the cost of acquiring one customer has reduced for Zomato. Let us have a look at the unit economics of Zomato. In FY20, for one customer, Zomato received Rs 43.6 in commission and other charges, Rs 15.3 in customer delivery charge, but it spent Rs 52 on delivery cost. So delivery is the biggest cost factor for Zomato. Then it spent Rs 21.7 on discount and Rs 15.7 on other variable cost. So the total contribution per customer was Rs minus 30.5. It means in FY20, Zomato lost Rs 30.5 per customer. However, let's look at the FY21 data. For the initial 9 months, per customer commission income has increased to Rs 62.8. Customer delivery charge income has increased to Rs 26.8. Delivery cost has reduced to Rs 44.6. Discount cost has reduced to Rs 7.3. And other cost is reduced to Rs 14.8. This has resulted in each customer contributing Rs 22.9. So as compared to FY20, the customer acquisition cost of Zomato has actually increased from a loss of minus 30.5 per customer to a profit of Rs 22.9 per customer. Please note that the cost associated with marketing, branding and other fixed operating costs are not considered here. However, due to increasing customer base and increasing repeat purchase, Zomato advertising cost has also reduced due to economy of scale. Its ad spend has reduced from 88.43% of total income in FY19 to currently at 22.4%. So going forward, Zomato plan would be to increase the penetration by adding more customers as well as more restaurant partners. Then another focus would be to increase the pro customer base, as this creates a good steady income for the company. Zomato would continue to increase its delivery infrastructure and expand its delivery partner base. If you look at the marketing of Zomato, I think it is one of the best marketing team in India. If you follow them on Twitter or other social media platforms, they have been very active and publish a lot of witty content that increases the brand awareness. For example, in one of the funny tweets, Zomato posted that Papa says, "Mera beta bada hokar collector banega," and beta becomes a collector of oregano and chili flakes packets. If you look at the key risk, Zomato has strong competition from Swiggy, QSR chains like Domino's, McD and other cloud kitchen companies, and especially Amazon could end up reducing its market share and can impact the growth and profitability. Zomato would need to continue to add more restaurant partners, delivery partners and offer attractive rates to woo the customers. Next risk is the profitability. Friends, Zomato is not yet a profitable company. It incurred heavy losses in the last few years. In FY18, the loss was 106 crore. In FY19, the loss increased almost 10 times to Rs 1010 crore. In FY20, the loss was Rs 2385 crore. And for the initial 9 months of FY21 till December 20, the loss has been Rs 682 crore. Zomato expects the cost to increase over the time and the losses would continue due to significant investment and business growth. Friends, no matter how fancy a business is, no matter how much revenue a business earns, at the end of the day, what matters is how much profit the company makes. So it would be interesting to see when Zomato becomes profitable. And it would also be a major risk for the company. COVID is still not over and it would continue to negatively impact the business of Zomato. Another risk is loss of restaurant partners. Friends, please try to understand that Zomato charges a commission with restaurant partners. This results in lower profit for the restaurant owner. In the future, restaurant owner can discontinue Zomato services and hence there is always a risk with that. If you look at the shareholding as of IPO filing, InfoEdge holds 18.55% in the company, which is highest. It is followed with Alipay and Antfin that together hold 16.53% share. Apart from this, no shareholder has more than 15% stake in Zomato. Overall, if we conclude, Zomato has a very promising business model. The food service market in India has a very bright future growth prospect. Being a technology-driven company, Zomato has a strong competitive advantage over the traditional food service sector in India. Hence, it is well positioned to cater to the growing trend of food delivery business along with other services like food review and its B2B business of supplying the ingredients to restaurant partners. On top of that, Zomato has a strong brand name in the food service sector. However, it won't be an easy ride for Zomato. It already has a strong competition in the market with players like Swiggy and cloud kitchen based companies along with QSR chains like Domino's. On top of that, the big daddy Amazon has also entered into the food delivery business. Friends, there is no doubt about the fact that Zomato has been on an amazing growth journey. But let's not forget that it is still in loss. On top of that, the strong competition from the likes of Amazon would make it bleed more. Hence, it would be interesting to see when it becomes profitable. And unless the company generates profit, it can't create value for the investor. With this, we will conclude this video. I hope you will find this video insightful. Once Zomato IPO dates are confirmed, I'll make another video with IPO details. And if you want to learn how to shortlist quality stock and how to pick mutual fund to make a balanced investment portfolio, you can explore my course on everything about money management. I will see you with another video. Till then, take care.